Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Well, looks like I've already kind of missed out on some of the fun here today. Coming out. Market's already like big down overnight. By the way, yesterday, man, I was so frustrated yesterday. And then after we left, to the charts, man. Oh my gosh, freaking yesterday. So yesterday, I'll give up. And then after we leave, it takes the plunge. So you know what I do? I reverse it. And I made most of my money back. I was still down like $10, but now in the overnight, another push lower, and we are already beating out the low of the year. S&P 500 giving back all of its gains from yesterday, just above the 3,700 level. We'll see if they just bust through that or what. They're right on the edge. It kind of looks like they're going to do it. Oil maybe actually turning up. Man, oil has gotten hammered lately. Gold and silver pushing lower again, as are the metals. And oh, how come I'm not hearing my sound here? Oh, you know what? I probably don't have my voice meter turned on. Bitcoin not quite seeing the pain yet, but I'm sure it's coming. And the dollar just skyrocketing back out of here. So, and 6J coming down. So I was able to fix my little indicator here. So now I can see we're at 148.74. So they still got a ways to go before 150. So this is basically where we're at. And yeah. So the news that we just had that you know, I'm a little bit slow this morning, but we did have U.S. housing starts number, which was slightly under expectation. Then we had the Canadian inflation numbers. So CPI month over month was 0.1 versus an expected 0. PPI was 0.1 versus expected negative 0.8. Building permits change month over month 1.4 versus a negative 0.8 expected. So all of those numbers look like inflation continues to be a problem. I'm not quite sure if that's what's moving the market at the moment. It seems to me that there's some larger chaos going on out there, and maybe some of it, in fact, happening while I've been showering here. No, looks like most of the move overnight was... So overnight, there was like some pressure from the UK. So also, it sounds like in the UK, they're going to get rid of Liz already. They're already getting rid of Liz. What I'm hearing. Like they have enough letters or whatever to try and change it. Well, let's see what Zero Hedge has to say about it. U.S. stock futures erased overnight gains of over 1% as worries about the impact of scorching inflation and a looming recession took the shine off a strong start to the corporate earnings season. Contracts on the S&P dropped 0.4% in an extremely illiquid session. Yeah. So the reason when yesterday happened, we had this big move down and I reversed it. The reason that I reversed it was because I could see what was going on in the liquidity. It was like the Europeans all sold. And then they were done and it was over. And so I came in and provided some liquidity, I guess you could say. I don't think that that's what I want to do today, though. Although, I don't know. When you have as big of a down move overnight as we've had, it's very difficult for me to go along with it, you know? It's pretty hard to make money off that. Right at 110 too. Is like, looks like there's some real liquidity below us. That might, well, that increases the chances of that being the low of the day. But man, if they could bust through it, it could get interesting. Yeah, so it looks like they're going to be retracing everything that we just got here off of the news. I wrote this in medium piece largely because of idiots like Richard Dawkins, says Nassim Taleb. Religions map to highly differentiated belief clusters and mentalities that have little to do with their theologies. Heresies are separatist movements, often ethnic, and have little to do with religious doctrine. Really? Well, that's curious. He wrote a piece on Christianity. Yeah. Kind of interesting what issues get Nassim Taleb's Jimmy's going. Nick Demiros, the average 30-year fixed mortgage rate hit 6.94% last week, the highest level since 2002, according to the Mortgage Bankers Association. Rates are up by more than 3 percentage points over the last year, and purchase loan applications are down 38% in that time. Yeah, and then on top of that, we are up literally 10 basis points overnight. Literally 10 basis points overnight. Chicago retweeting their comment from yesterday. Bonds, my god, yeah, the overnight in the bonds is pretty brutal. Pretty brutal. Liz Ann Saunders being retweeted by Jim Idurio. Prospective buyers traffic component within the NAHB Home Builder Sentiment Index continues to plunge at a rate only seen during the COVID-induced recession. Also, the Fed has gone far enough, sadly. They will probably keep going, says Jim. If rates stabilized at these levels, the inflation would work itself out. Unfortunately, it would take longer than the Fed wants. The Fed wants it fixed now. This notion is what will cause the trouble. I don't know about that. So, like, I do think that we should have started raising earlier. And, like, if we're going to have a recession, quote unquote, people are saying, like, we're going to have a recession that will probably bottom early next year, like in February. Okay. If we had done that 6 months earlier, and if we just move everything 6 months earlier, that means that we would have been having the recession in like July, right? That would have been a lot better, right? But the issue is that, like, when you look at rents, for instance, I think there's been this assumption that, like, rents asked is just a, is just a few months forward of the, what do we call this? Owner rent index, whatever it is that they use in CPI. So they think that the CPI component is just a little bit lagged. That's not entirely true. There may be some divergence between the two indicators, but then on top of that, it's not like rents asked is like going negative or anything like that. It's just that the pace of rise has slowed, and the pace is still well above the target. So you're gonna have to see at least one metric on prices showing that, like, they're on target now, right? I think that's what the Federal Reserve is doing. Because one of the things that one of the mistakes I see people making is they're saying, oh, well, the Federal Reserve is using a lagged metric. That means that they're going to make the wrong decision. No, the Federal Reserve can use whatever metric they want, right? It's discretionary for a reason. And the Federal Reserve completely has the ability to come in here and say, well, when we look at other data measures, we can see that actually housing inflation has slowed down, and so we can stop raising rates so aggressively. Like, they can do that, but they're not going to do that, because even when you consider how much it's come back, it's still not even close to on target. right? So I think the reality here is probably that you do have to have like a real jobs recession sort of a situation before the Federal Reserve backs off. Right? Walmart will be closed on Thanksgiving. That's interesting. It usually means that they're not expecting a very good sales season. That's what that actually means. Okay. Going back. Okay. Not a whole lot. Okay, well, they've been chilling there at 03 for a little bit now, haven't they? I'm kind of tempted to go long here, but I think it's probably better for me to... I don't know. I have a bunch of different feelings this morning. You know, yesterday, after taking a couple of losses during the regular session, I was feeling pretty unmotivated, I guess. And then I did make some back, but I was still feeling pretty unmotivated. But then in the evening and morning, I feel a lot more motivated. Like, especially like on things like, oh, what can I do this weekend? I really think that we should try and make a video about, you know, the future trajectory of inflation. There's a pretty good research note out by Goldman Sachs that goes into a lot of this stuff that we could use as some of our source. We can talk about all these metrics and go into detail in it in a video. I think it'd be a really good video. Good morning, Apollo. By the way, good morning, Mushroom. You've been like the first person to chat like all week, Mushroom. I kind of started a little bit late today, though, so we're a little bit down on viewers. It'll take a while for people to filter in and realize I'm live now. I don't know why. I guess I was just like too much in my head in the shower or something, because like when I got in the shower, I'm like, oh, I'm ahead of schedule. I took a tick up, now 2 ticks down. This is actually an area where I think I could probably pull a tick or two out in the full treasuries, but I'm not sure. Like, I'm still not super confident on direction. I guess I do kind of feel like that we probably should have some sort of a reversal, or that this may have been news driven and that the majority of the downside action is over. Which means that maybe you can take it long, but just don't like overdo it, you know? But that 110 kind of looks a little juicy, so I'm a little worried that they might go down for it at a certain point. Why do you prefer to actively trade bonds? Well, so the reason that, so there's a couple of things that are really advantageous about the bond futures, okay? The first one is, and I talk about this in my, you know, micro treasury yield futures video a lot, but one of the big ones is that it's the lowest amount of risk for day trading. Micro treasury yield futures, lowest amount of risk you can take out there, basically. I mean, yeah, you can do like Bitcoin and stuff, but like Bitcoin can move like super huge on you all of a sudden, right? You never get that in bonds. So bonds are very stable and it's very minimal risk. Okay. But then the other thing is that the bonds are very economically sensitive and very liquid. So it's a lot easier to come in and find an informational edge in the bond market, right? There can be information out there that the bonds aren't factoring in. And we've seen that. We've seen situations where that's been really extreme too, right? Like at the beginning of the year in January was a pretty good bet that bonds, you know, that we were going to see interest rates raised because we were seeing inflation and the Federal Reserve said that they were going to raise interest rates. And the bonds hadn't been moving yet, but we knew that it was going to happen. Why is that? Well, because short-term liquidity concerns can outweigh the fundamentals. So when you get into a situation where then they're forced to come in line with the fundamentals, and you know when that's going to happen, then you can get really good trades, right? Or you can hear these economic numbers and you can just be fast. We've done that a few times this year, right? So of course, we've been lucky this year. There's been a lot of volatility, so we've done well. I wouldn't say that it's nearly as well as I would like. I really should have come in here and like doubled my account, and I'm, you know, a little bit above break even. And it wouldn't take much for me to give those profits up, right? But yeah, it's a lot easier to find an edge in the treasury. It really is. How does 10-year yield work, and what's everyone worried about? Is the government paying itself from their own debts? Well, okay, so it can be the case that you might be paying off debt from other debt that you take out. Yeah, that happens for sure. The whole thing is though is well, what are we really asking here? So question number one is like jet to GDP, right? That's the metric that we look at. What is the debt to GDP? And historically speaking, economists get concerned when debt to GDP is 200%. Okay. So if you think about like, okay, if you get 2% inflation per year, right? That you know is going to wipe out that debt after a couple of decades, right? So, but once you get over 200% GDP, that's when it like starts to break things. Okay. So that's the first thing. Okay. Now, the next thing is that they're saying that the government will have to pay too much to take on new debt, right? Well, so that is a problem, but like what they're actually paying on servicing GDP is not really a huge factor at the moment, right? And the thing is, do we really expect, at least the market seems to think that these interest rates aren't going to stay for very long, right? Market doesn't think that these interest rates are going to stay around for very long. I think the market thinks that, you know, next year they're going to come back down, or that in the next 5 years they're going to come back down. It is the banks that print the money. If the banks, well, I don't think that you'll ever see that happen though. At least not amongst the US banks, because they got a real system. It's not that they're going to like not trust each other. So where you run into a problem is, okay, so let's say for instance you are a large company and you have to pay payroll, okay? So you have enough money to pay payroll, of course you do, but you don't have it in cash, right? A lot of that money is in your stock price, for instance, right? So you can have a credit line with the bank to help you pay your payroll, especially when it comes to like the end of the month or the end of the quarter, for instance, right? Or maybe you're like end of year paying bonuses, something like that, right? So we can get into these situations where like a lot of people are doing that. And then there's like this really high demand for dollars, right? And so a bank will come out there and they'll be like, well, we need more dollars, so let's go out to the market and see if we can get more dollars from somebody else, right? Well, if all of the banks are doing that, then the interest rate that you have to pay for dollars like skyrockets. And that's where you get like the repo crisis, for instance, right? So with the repo, and the thing is the banks don't want to keep like dollars on their balance sheet that they're not using, right? They don't like to do that, but they needed the dollars at certain points. So what did they do? They printed a bunch of money, and then the banks just keep it there, and then they loan it back to the Federal Reserve overnight at this reverse repos facility. And so there's like $2 trillion worth of cash out there that they need to use to like, you know, pay for things in certain situations. Okay. So that's the first thing, right? And that repo is still really high. Okay. So the point at which like money can't even move in between banks is it's a long way. It's a long way away. That's not something that's going to happen this month. Maybe when we get to this point where people are saying that like the market is likely where the market seems to be predicting that we then get out of this, which is like next February. So like 4 months from now, 4 or 5 months from now, you know, then maybe that sort of thing could happen, but we would probably see a big change in the repo facility first, right? So I'm not an expert on short-term banking, that sort of stuff. Really, you want like Fed guy is probably the best person to look for that kind of information. But that's my understanding of it. Okay. But what you could have happen is you could have a situation where money is just not moving around between people simply because people aren't transacting. That could happen. Sure. It would be a problem. How do you get the money moving? But I don't think that. So I think that what you're doing there, though, Captain Price, like we just kind of got to get in our own minds for a second, right? That was like the primary concern through like the entire quantitative easing era, right? And a lot of it had to do with this kind of this interesting situation where, like, don't get me wrong, the federal funds rate changes things, okay, and it definitely changes our interest rates, etc., etc., etc. Okay, but you had this kind of situation where you know, it's the banks that actually print the money. And so while there's plenty of money in our banks over here and there's plenty of money in the US, some foreign countries, there's not enough money. And what you're seeing right now, in fact, is they are actually like selling their treasuries. So there's kind of, there's a problem going on in emerging economies. Okay. It's basically, it's a different issue. It kind of has a similar root cause, but it's kind of like the other side of it, right? And it has completely different implications. So right now, I don't think the concern is the US government can't fund itself, it's going to default, or we're taking on too much debt or anything like that. Like, that already happened, and assuming politicians aren't complete effing idiots, that should come back. Did you know that taxes as a percentage of GDP is actually like close to its all-time highs right now? Okay, so they're pulling money in, right? They're pulling money in right now. The issue is, what do you do about all of these emerging economies? Because last time this is the first time this has happened, okay? Because this is what happened in the 80s when they were raising interest rates in the 80s too, right? And it absolutely destroyed those emerging economies. And especially when you got these guys like Japan being the big one. Yeah. I don't know how Japan is going to sort all of those things out. Do you see the thing overnight that they were saying I don't know who it was, but one of their monetary finance guys in Japan was saying, well, interest rates don't directly cause foreign exchange moves. I'm like, well, I guess that's technically true, but kind of besides the point, isn't it? The Japanese cannot continue to be doing monetary easing without it destroying their currency. And how bad can that get before that's a really big problem over there? Or especially if they actually see inflation, you know? So, you know what I'm saying? It's a different problem. Okay. So where the problem right now is concentrated in the UK, primarily is the biggest one, Japan, and then Italy. Okay. So we're seeing it in the UK because it's already affected pension funds. Right. And I think this story, so yesterday when we had that big drop, I think the story on that one was news that like some of the mortgage holders were like selling them. Like they were being forced to sell them because of redemptions and stuff. Which I think kind of scared them and said, oh, like they may still need to sell. So like the thing is there's like these pension funds and they have all of these assets on their books. And like we've had like a VAR shock. So they had to sell some of their treasuries and the UK kind of had their hand out to take care of that, right? But if you're the fund, you don't want to have to sell them. You want to keep them and keep getting the coupon payment if you can, right? So they would like to hold on to them. So I'm sure that some people held on to them and they just kind of got themselves like squared away and everything, right? So I think the concern now is that another shoe drops and more funds in the UK have to sell stuff. That seems to be the driver behind this morning's action. Then we had a little bit of news, which was negative, but like we're already down. So does that mean we should go long though? I'm not so sure. Not so sure. Because I'm still scared about what the Europeans may be doing, so forth. And it also, another thing was we did get some information about like the treasury holdings and so forth. And it does look like that even though I don't think that Japan has to sell treasuries to do their Forex interventions, they have a swap line with the Federal Reserve, okay? But overall, Japan has been selling treasuries. Can I use C# to build my UI in Visual Studio for NinjaTrader 8? Yes, you can. That's how I made, well, for instance, I have the Risk Center. And it has this little interface and you can come in and you can add a rule. It already has a daily loss rule. Add it in there, etc., etc. So there is, if you go, I'll show you. I'll do the work for you. So if you go to the NinjaTrader 8 help guide, there's this whole Ninja script section. And then there are, I believe it is under educational resources, right? And then you want to look at add-on development. There's an overview. And then here below is a NinjaScript editor compatible zip file, which also contains a XAML file. And you download that, right? Oh, well, I would recommend doing the one below that. Here's this one. Visual Studio solution for add-on development. So you download that one, and then this add-on has like everything in it. It has this, it's this big window that has a little component for every little thing that it can actually get in. So then you just have to say, okay, which type of events am I actually looking to listen to? Find that part, delete everything else. So it's actually a lot easier to build add-ons than people think. It's just, it's a little intimidating because it's WPF and all that sort of stuff. Yep, yeah, it's done in WPF. I don't know why more people don't use it, but I think people lack imagination, I guess. like the retail trading world is all entirely focused on what? Charts. Always want to look at charts. That Japanese yen doesn't look so happy. Doesn't look too happy. Traders summon, blah blah blah. You know what I need to do? I need to get on some podcasts, I think. I was watching this the other day. I was like, well, I don't know. Like, the thing is that the podcasts that I would be willing to go on to have like many much better people to interview. But if some of those bigger ones want to have me on, I would probably say yes. I'm always seeing stuff like, but you know what? The kind of the funny part about it though is that I don't watch the podcasts. I would rather read the research reports and know what's going on myself rather than watch a podcast. I'm going to shift my career into data analytics. What do you think about it? Is it a good career to pursue? And also, I think the future will be more data driven, so there are a lot of prospects. I think so. Well, so basically what you're talking about is being like a data scientist of some sort. Do you know that the term data scientist basically was invented by Google? Like, basically what happened is they wanted to hire this PhD guy. And so they had this job. It was like a data engineer or something like that. And he's like, no, I'm not going to take that job. And so they went back and they just called it data scientist. They didn't change anything about the offer, how much they were offering him or anything. And then he took it. And that's where the term data scientist came from. Did not know that. So Zach, here's the crazy part, right? Is that all of these controls, like this Ninja Trader window, is a WPF form. So you can go into a chart indicator and you can get access. It's kind of a little wonky, but you can get access to the actual form and start adding components yourself. And that's how people I have a video about it. It's actually, I kind of regret making that video because people always ask me questions about it. And it's like, you got to figure it out. I gave you everything that you need to know. You got to figure it out on your own from there. But you can add buttons onto the chart, for instance. Yep. There's some wonkiness to it. Like, there are maybe some things that like you would want to do like an MVVM pattern, where you can't always trigger it correctly. But my mind is going 1,000 miles an hour on so many ideas. Yeah, like the thing that you get if you're a developer, man, the thing that you got to realize with Ninja Trader 8 is that most of the people that are making indicators for this are not C# developers, right? So I'll give you an example. This doesn't have to do with the WPF, but it has more to do with it being C#. So if I bring a chart over here, okay, and I have this thing called a volume profile column. I should probably change some things. Yeah, so there's a volume profile column. So I can add this volume profile column on here. Okay, so now the thing is that in C#, objects know stuff about themselves. Like any object that gets created on the heap, there's like information at the start of it about like what it is and where it came from and all of these sorts of things. So you can look at any object and have it inspect what it is and so forth, right? So first of all, I can come in here and just like make it bigger. Oh, look at that. Now my volume profile is bigger. Don't you hate when you have to go into the Ninja Trader volume profile column and like be like, okay, I want to change it a little bit here. So then you go into the settings. Oh, that's not big enough. That's not big enough. What if you could just come in and just resize it? Oh, isn't that wonderful? Right? And then I can come in here. It gets even better because then I can come in. What's the other column that I have? I made a bunch of them actually. But I have to remember what they were called. I didn't name them very well. I wasn't very... level 2 column. Okay, sure. Let's add level 2. Yeah, okay. So I can click OK. Oh. Oh, maybe that one. Oh, it doesn't work because it says that you need tick replay. Turn on tick replay. Gotta give it a second. I might have gotten the wrong... maybe what I should just do is add the volume column in there twice. You hear that? Yeah, that happened like a year ago. Actually, I've kind of been... I'm wondering about that because, like, not much has changed yet. If anything, it just kind of made people, like, not move over to Tradovate when they could have. Okay. Okay, there you go. Now because I have tick replay, it's showing them all. Okay. Ah, look at that. So now I have 2 columns and I can resize. And they work. How do I do that? Well, this column knows that it's a column and this column knows that it's a column. And so they go out into the chart and they look at what its siblings are. And it figures out where it should be based on its siblings. How cool is that? And you can only do that because of C# reflection. So there's sort of stuff that you can do in NinjaTrader that, like, people don't think about. I was kind of disappointed when NinjaTrader made their own volume profile columns, because I was like, they could have done it, you know. Like when you add an indicator, it adds a new panel, right? Why don't you just have vertical panels? That's the way it should be. You should just have vertical panels and then you can resize everything. No, they kind of did the hack that everybody else was doing. Mine's better. Hey, NinjaTrader, if you want this, I'll give it to you. I'll sell it for really cheap. I'll give you a really cheap price on it. You can take it. You know what, quite frankly, almost everything that I've made, almost everything, if I had it my way, almost everything that I've made would be built into NinjaTrader. Almost every little thing that I've made is stuff that it's like, I really feel like, you know, you kind of need this almost. I don't know. So like this one that I just made, the inverse one, I'm kind of surprised there's not a built-in indicator for that. I mean, it's really simple and stupid, but like it should still be in there by default, right? This dollar index one, maybe I understand. You might not be able to include that with your platform. But spreads? Can't believe that there's not a built-in spread indicator for NinjaTrader. I have a really good one, NinjaTrader. I can give it to you. It's really complicated. It does some. So you know what's my I'm bragging. You know what I'm doing? I'm bragging, guys. So you know what's cool about my spread indicator? So if you go in and you do a spread, and so I have like my main chart is the ZN, and then I want to add the knob spread. So then that means that I have to go and add a ZN data series and a ZB data series to be able to see, to be able to calculate the thing. In other words, I load ZN twice. Well, that doesn't make any sense. Doesn't that like take up more memory and make, you know, and all that? Yeah, it does. So what does my indicator do? My indicator is able to tell what the main data series is, and then selectively load only the data that it needs and reference the main data series for the calculations if it's available. So you use less memory. So if you're using my indicators and you haven't updated it this year, you should go to the website and download the new version. Because that's one of the things that it does, is it reduces memory usage. I also like consolidated it all into one indicator so that you can just switch it between line and candlestick from that one indicator. So the candlestick version of it will probably go away eventually. I'm pretty proud of my indicators, guys. Just realizing how many, like, when I go through and I do it, it's like crazy, like the number of them that we've made. And like, I think that almost all of them are really useful. I think one of the things that kind of I get into is that like people are more interested in the order flow ones. And the order flow ones were kind of created more as like a, well, here's this data that we know is hard to see and that we might want to do stuff off of. But I don't know how you turn it into a complete system. I've been, you know, putting robots together. I've done a couple of things, but yes, Ninja has a built-in correlation indicator. So I had made my own correlation indicator, and then Ninja included theirs. And yeah, and part of it might be that Ninja doesn't add these things in because they don't want to step on their ecosystem. But I think what they should do is they should say, hey, this feature is really valuable. Let's pay them for it. Because to me, I'm not care so much about making money off of selling the indicators as much as I am that everybody is able to have it. Now, in order for everybody to be able to have it, I have to be able to make a little bit off of it to be able to deal with the overhead costs and like justify putting more time into fixing any problems that you guys come across. And especially so D in particular, he is constantly showing me stuff that he's done with my indicators, and he was a lot of the driving factor behind a couple of the changes that I made this year, right? So that's the only reason why I charge. Because if I was looking to like make a living off of it, I would charge a lot more, right? And I'd be a lot more aggressive about it too. I was kind of wondering if the ZB was gonna try and like take a reversal. It kind of looks a little heavy at the moment though, doesn't it? And the volume in the 10-year still looks to be to the downside. In fact, we're probably down about 7,000 contracts from when we were up here. So you know what though, on the correlation indicator, because I was looking at the other day. So there's this guy, I kind of hesitate to like use names, but I'm sure he'd be friendly. Oh, and I don't even actually remember his name. It's like Futures Analytica or something like that. Maybe he's watched the stream before, because a couple of the things that he was doing like looked suspiciously like stuff that we were doing 3 years ago. So like it looked like the stuff that he was showing on his channel was just like 3 years behind. Captain Price says, I know that one. I think you mentioned it before, because I was saying like, oh, I'm the only one talking about market microstructure. And it was like, oh no, this Analytica guy is too. Well, he was talking about market microstructure, but it was kind of like really what he was talking about was cumulative delta. That's as deep as they had gone into it yet. And he had a study. But I actually had some issues with the study. So the study was basically like cumulative delta leads price changes is what was their kind of take on it. And especially in a certain quantile of data. So what they were doing was they were looking at like when price and cumulative delta are correlated, essentially. When there's a certain amount of correlation, then I'll take a trade in that direction based on a short-term order flow imbalance. So it's a couple of concepts that we have back tested before, but combined a little bit differently. So I went and I did it yesterday, and I'm only able to backtest that on a year's worth of data, but the quality of the data is not very good, Well, I might be able to go back and do like a 1 tick underneath back test, but basically like I tested for a year and trading one ZN contract, it made 20K, I think. But there was a lot of trades in there that were like worth $1,000 when like the take profit was supposed to be 4 ticks, right? So that means that I'm getting quantization inaccuracies in the data, so it's probably a lot less. So like it comes back to this thing where it's like trying to test an order flow based strategy using historical tick replay is not accurate enough from what I've seen. It's not accurate enough. And the guy that did the study, his was based on IQ feed. It kind of did sound like it was historical data though. So I don't know if that's like a lot better or not, but so like I'm suspicious of the results because of that. But then the bigger problem though was like in the study, they only had like 62 trading days, which is like nothing. I have more than 62 trading days recorded now here. Yeah, imbalance does not work well, and your man Connor is out there to trade the newbie. Yeah, well, so what I was kind of getting at was like, it back tests well, but there's issues with order flow back testing essentially, and I know that there's a fat tail with it, right? Because I wasn't doing exactly what he was doing, but I was basically trading a robot with that back in 2019 and it blew up. You remember that? Like we were doing some of those. So like an imbalance on a rolling window is basically what Jay does, right? And what did we find with Jay? He'll work really, really well for a while, and then all of a sudden he won't work well for a while. So like there's market regime changes. So even though I think there's some good theory behind the imbalance and everything else like that, it's kind of question. And you say that Connor is out to con the newbie, maybe. Why is your Discord channel ask for phone number verification? Because we get so much effing spam otherwise. So that's how Discord reduces spam. Sorry. Sorry. Anyways, yeah, so the thing was is that he was like had this all built up into, it was kind of funny because he was like, yeah, like there's only a little bit of this guy. That's where I'm like, he has to have been watching. I don't know if he's out there to scam people or if he's just a little bit more naive, right? Because he was saying like, the reason the video clickbaited me because it says hedge funds aren't allowed to trade this. Well, it's not that they're not allowed to trade this. It's that there's not enough money in it for them. Okay. And he even kind of talked about like how much the market could take and that it wasn't very much. But then he's like, and it can be yours. I'm like, what? What? You acknowledge that like it can't handle very much volume and then you give it to everybody to trade? What the hell is wrong with you, man? That kind of like threw me off, right? So anyways, the whole point of that though is that one of the things that you have to do is you have to look at how correlated is volume or is cumulative delta and price essentially. And that's a very large part of what I kind of do to some extent, right? Is I say, I think that the flows are going to be this way. And then when I see the flows moving that way and price and order flow are correlated with each other, then I'm willing to take a trade, right? Well, but the reality is that when you use the correlation indicator, I never get a very high correlation. So I think that the form of correlation that they're using is not the best. Right? I don't think There's got to be like a more flex, because when I look at it, I'll see like this move right here, right? In the 10-year. I don't know why this is still keeps popping up here, but I'm gonna minimize that. I'll see like, okay, we had a move down here. Order flow was very correlated with that move. They're both moving in the same direction, at least. So I see these two generally are moving in the same direction. But the correlation indicator says that the correlation is only like 0.02 or 0.2% or something like that, which means it's not very correlated at all. You know what I mean? It's not very correlated at all, because like in order for the correlation to really be like statistically significant, it needs to be above like 0.8, right? So like even though the back test worked and everything, like the whole thing was kind of sketch, right? It was based on flawed statistics. You send me, yeah, if you give me your name, I'll try. I don't know if that changes it though. I think last time this happened, we like disabled it for a second for the person to join, and then why don't I try doing that? Let's see if I can remember how to do that or if it'll work still. I don't know if I can change it while I'm here on stream. Actually, yeah, you'd give me, yeah, I would need your Discord name with the numbers after the end. Or you can message me. What is my full name? Yeah, here it is. Okay, well, we did come back to the higher end of this range. I don't know, I'm not sure I'm feeling today. So yeah, basically the whole point of all of that was, if you know of a mathematical way of, you know, plotting like how correlated two things are, that's better than the correlation that NinjaTrader is using, that would be useful. Because it seems like it should be better. Maybe it's just the noise in the individual bars. Maybe if I was using a moving average that smoothed the changes out, the correlation would look higher. I don't know. Done. I'm not seeing anything. Maybe it's because you're still gonna have to tell me what your name is, because I have like a million friend requests. Which by the way, if you're out there, like on Discord rather, I don't see that one. What you should do is you should send a message. Actually message, because you don't have to add me in order to message me. Mr. M? Oh, I think I see it. Okay, let's try this. Okay. Invite sent. See if that works. I don't think it actually is. I don't think it actually will, but we'll see. Why are you so against verifying your phone number, man? Come on. We can't see it. Only Discord sees it. Do you think we're going to have layoffs like 2008 this year? Well, we're supposed to, or we need that. We need to see layoffs, right? Nah, I don't know. We need to see the labor market loosen. Yes. Discord can't. Oh, because maybe you're like in a different country or something. By November will be obvious. So far, I can only know low-key jobs are getting laid off from what I've seen, like restaurants. I mean, it has been you move between countries. I think the answer for that one is to use Google Voice, right? So if we come over here to Forex Factory, and we look at this month, and we look at that first Friday non-farm employment change. We look at the data series. You take COVID out of the equation. Okay, and we can see that while there's quite a bit of noise, that since the Federal Reserve started raising interest rates at the beginning of 2022, we have seen a slow and steady decline in jobs created. Now, it's not negative yet. I think you might need to see it be negative. That or you know, average hourly earnings would need to come back. Well, average hourly earnings hasn't been too bad. That's kind of like the... So this is the thing that concerns me. There's going to be a cost of living adjustment for people on Social Security, right? For instance. So like at the end of the year, there's these things that, you know, that could increase inflation. I don't see how, you know, if you're a white collar job working professional and you take like a 5% hit in your salary 2 years in a row or something, like that's not... Yeah, companies are going to have hard problems with that, right? So I think that companies will a lot of companies will be forced to do higher than normal wage increases at the end of the year based on performance and stuff, right? That's... And then baby boomers are coming out of the market. I don't know. There's lots of other... There's like what we want the data to do, but is it actually going to do that? We can't be sure. That's where I think many people are of the opinion, should I say many people? There is an opinion out there that the Federal Reserve should be backing off of interest rate increases already, like right now. And I just don't see how you can do that with the current data, because we don't have a single piece of data that says that it's actually coming back, really, other than like industrial production, which has more to do with the dollar being so strong more than anything else, right? It's just, nah. And the whole problem is that there's been many times where they've said, oh yeah, but the metrics say that the inflation is going to come down, and then it didn't, right? So, and if it doesn't come down and you start backing off, then that would be really, really bad, right? All right, so how are we doing here in ES? They buying this? I'm going to put this over here. Sorry, you won't be able to see it. It looks like it is moving up though. What the hell? What the hell, Jigsaw? Yeah, I mean, everybody seems to be thinking that we would be in a recession in February, even though technically we're already in a recession. But I assume that means that it would be like a jobs recession, right? By February. We'll see. We'll see. That's when we should see it, right? I don't know why this just kind of popped into my head, but like yesterday I had a little bit of free time, so I was messing around with Rust, and I was trying to create our little timer thing. It's like I want like an overlay that's transparent, and it was so effing hard to get something transparent because apparently WGPU, which is like the most popular pure graphics drawing framework in Rust, of course you can use like Vulkan or Direct 3D directly, but most people seem to be trending to this WGPU thing, but it doesn't correctly support window transparency. So it took me forever, and then I did finally find a solution, and it took me forever to get that solution to work because he had his dependencies outdated and stuff. Finally got it to work, and I had to like install all this stuff on the machine like CMake and so forth to get the build to work. What a pain in the butt. Okay, so at the moment, we definitely have enough auto-correlated order flow to justify taking a scalp long. In fact, we're probably a little bit too late on anything like that. Has come down about 2 basis points or so. But we have the S&P 500 opening up, so let's kind of see how that goes. When I look at the action overall, you know, it's kind of all over the place. So that's a super speculative thing to say it's going to continue moving up. And I'm not sure if I have any super good predictor of order flow that says we're going to move up. I just kind of my inkling, I guess. I guess I could take it I could just say I'm bored. Good morning, Tobias. Could just say that I'm bored. I don't know. I think it's probably better for me to hold back a little bit. It was 1947 at 09. Goes offer again. I think that at least justifies resetting our DOM. Okay. Good bid. Good bid. Well, it was at 08, right? It was like right at 08. So 08 is if we had decided to, at that moment when we were thinking about it, take a trade. That's where we can kind of base things off of. And to be up 5 ticks is not too bad. This is an area though that I'm a little bit weary of. A little bit weary of this area. Yeah. Okay. Pushes back the other way. So it looks like the 10-year is not necessarily the thing driving this move, though. Kind of looks to me like it's the 30 and 5 pushing it, but it's across the board rise. What do you think is with that? Mohammed El Arian pronounced yen weakness results from the sustained implementation of yield curve control in the context of higher global yields. Most assume that the policy regime will continue together with more currency intervention. The alternatives are worth analyzing. You say the 2 years seems to be lagging a little bit? Sure does look like they're going to trade a good amount of volume in 09, right? Yeah. So that time, the 10-year actually dragged the 5 down. Did you see that? The 30-year didn't move, but the 10-year dragged the other one down. Okay, so Discovery Trading Group was retweeting this thing from Mohammed Arian the other day saying, having an independent Federal Reserve is critical to the well-being of the U.S. economy. Having said that, it's getting harder to justify such independence when 4 big operational errors of analysts' forecasts, actions, and communication are accompanied by a lack of accountability. So, I think some people have been saying that, like, well, if they can't be held accountable, how can you expect them to perform? I think that the people at the Federal Reserve are more than motivated to perform, right? I think the issue is that the selection of the decision makers is not made based on their past performance. Past performance is not indicative of future results, but don't you think that you would want to have somebody in there that at least has some record of making good decisions, right? That's why I really think that we need, and I know people will hate me for saying this, I think you need bankers in there. I think that it shouldn't have been, I think that we missed an opportunity. It shouldn't have been Jerome, even though I like the guy. It should have been Jamie Dimon. I think Jamie Dimon would have done a better job. Maybe he would have done a better job. Could be wrong. But you know what I mean? I think that we need, like, the leader of one of the big banks to be the person that does it. And why would Jamie take that job? Because he's a good guy. I think that if he was offered the job of Federal Reserve President, it would be very difficult for him to turn it down. It would straight up. Okay, so like, I don't know if David Solomon at Goldman Sachs is necessarily a similar example, because he kind of came more from the tech side. Okay, but let's just say it was Lloyd. Okay, let's say that Lloyd Blankfein was still president of Goldman Sachs right now, okay? And they wanted Lloyd to be chairman of the Federal Reserve. I know he's not, like, he was maybe, Jamie Dimon is, like, clearly a good pick. I don't know if Lloyd would be or not. I don't know enough about him. Maybe he would be a good pick, okay? But I'm just saying for the sake of argument, okay? If Jamie Dimon as CEO was offered the job of Federal Reserve President, he would be obligated to take it. Like the other people in the firm would be upset if he turned it down. They straight up would, because they are constantly preaching our responsibility. That's why, people complain about there's so many people in government that come from Goldman Sachs. It's because they're trying to control their it's because Goldman says that the public service is an important thing, and that if you are given the opportunity, that you're supposed to take it. And I know that JP Morgan has a similar culture. So if Jamie Dimon was offered that job, I think he would almost certainly take it. Yeah, can you see how, like, it's kind of funny? So I come in here and I remember we said 0.8, right, was the spot where we're like, well, maybe we could take it here. Okay. Clearly you would have gotten 5 ticks in your favor, but clearly it didn't go. I didn't take it because I felt like I was too late to the party, right? But like I almost immediately started to see a little bit of, well, I don't know if we necessarily performed a hole per se, but there was definitely some volume and rotation around 09. And what do? I don't want to be around those, right? I want to avoid those. And so of course we come back down. Black October anniversary, really? You know, something. Do you guys know of a tool? What's the best tool to like compare a chart against itself? Can you do that on TradingView? Can you do that on TradingView? Because people keep showing these charts of like 2008 overlaid on top of each other, and I keep seeing them change it. They keep changing it. It drives me crazy. Because it's like it'll go up and then they'll go, oh, actually we need to anchor from this point to this point, and they change the scaling and everything of it so it matches up again. And nobody else sees this. Nobody else sees this. So they're like, all of the charts were saying like, oh, the next step is like lower. But now all of a sudden Zero Hedge is saying, oh, actually, no, we should have a little bit of a recovery here. But if you were doing it like day to day, this was when the market was like really puking in 2008, at least. Well, how far back down you think this is going to come? Wow, this is kind of a similar signal from yesterday, right? Which is just that it's not moving super well here in the regular session with lots of people trading it. And you might want to be going against the turns. So I'm not seeing anything to clearly indicate that we might be at a node here at 06, let's say 06, you know, but maybe if it was, maybe the trade is to take it here. SMB is puking. Let's not say puking. They gave up their initial gains, correct. They gave up their initial gains. The cumulative delta is looking a little scary, though. Cumulative delta is looking a little hairy there. They haven't like completely given up all of the opening gains yet, like delta, but they're like right on. It's about to go lower. ICE is at 3,700. Yeah, I'm gonna bet that there's a pretty high probability that they will try and hold 3,700. Probably. Whether they'll be successful with it is another question. But I'd be really surprised if I didn't see some like absorption and defense at 3,700. At the moment, they're still kind of up in here. Like, if you had to hold me to like a prediction, I think the most likely thing is that they just kind of chop around in this area and frustrate any kind of prediction that I make. Right? So the whole thing was that when we had last week was kind of a big week, especially with CPI and that being towards the later end of the week and that ending up being a big number and everything, right? So now you come into this week, you don't have as much news. You do have the options, okay, which may kind of like peg them, right? And you do have earnings. Keep an eye on Apple, Netflix, Meta, big things, big roll, yeah. you do have earnings, although so far earnings have not been as dominant in the direction as you would like them to be, because earnings have actually been pretty good so far. I didn't look at what the Tesla earnings were. You know what happened was I kind of jumped on board the paying attention to Tesla train, not the like I want to buy Tesla train, but like this is clearly the most popular stock, let's talk about it because people want to talk about it train. And like immediately when I started doing so, I regretted it, because then Elon started doing all this crazy stuff, and like it was kind of fun and entertaining at the beginning, but like I got really bored of it really quickly. I should be making a TikTok like every day, and I continually find myself coming in and being like, nah, I don't want to make a TikTok about that, and just not doing anything. It looks like they're trying to pull it out. So you see, they're trying to pull out the top here, but they can't seem to get, like, there's like low latent liquidity here at 0.75, and it just can't quite get over the hump. That's like, okay, yeah, you're gonna bid 200 and it's still gonna be 600 offer here. I'm not gonna hit into that, right? Needs a bigger bid for them to get out of here. Then it comes back down. They just did it again. Right now it's still live because it's so popular with people falling, or at multiple accounts get hijacked 3 at least a day, I'm seeing on YouTube. Really? You mean like their account gets hijacked and then somebody all ends on Tesla calls or something? Sure. Oh, Bitcoin. It was the same thing. You know what it really is? Like when we look at, okay, what can we do to make the channel stronger? Because if we make the channel stronger, that would help all of us, right? That would be more resources that I can put into research and put into more things that would help you guys and help you stay informed, right? But every time that I look at, I see something that I'm like, well, that would probably help, right? It's like, no, we don't want to do that. Yeah, we could make a lot of videos about covering Tesla. That would probably get us a lot of traffic from Tesla. Maybe. Do we actually want that traffic? Do we actually want to make videos about Tesla? I don't want to make videos about Tesla. Oh, they're coming back down hard. Was there a real delta behind that? Maybe a little bit. I don't know. That move was a little unexpected. Isn't it funny? I told you, like they're at 07 half, right? They bid a low latent liquidity, takes it back down. Couldn't get over it. Wasn't enough for them to overcome and start pushing it over the liquidity. Because that 1600 or whatever there was there at the top, they're gonna want the fill. Well, 4.10, can I call it 4.10? 4.1 seems like a much better place for a trade, and kind of where maybe I was initially thinking like, well, if we want to go long today, we want to go short rates today, that would be like the spot to do it. So I'm tempted, but at the same time, I'm also kind of looking at this little move down. Feels like it was a little too fast. Like we are pushing lows of the day now in cumulative delta. I didn't hear any news. Didn't hear anything on my news squawk when that happened, but that does have me a little concerned. Okay, it is gonna swing back up just a tad. back to 06. So 4.09.5. Well, we would be happy if we took the 10. I think I gave it a little bit. If that's the trade we really wanted to make, I think we gave it too much room. That decline has me real bothered though. Timing wise, Paul Krugman, one of the most depressing things about the U.S. political economy is the salience of gas prices, which for the most part have nothing to do with policy. $5 gas earlier this year seemingly made a red wave inevitable. Democratic recovery was driven by Roe, but also falling gas. Give me a break. Okay, falling gas probably was one factor, yeah. Maybe one factor. Man, it's already gonna give us 12. I should have taken that, man. Should have taken that. I sure don't like a market that can move 2 basis points that quickly, though. You see, it's kind of going from this like slow grind to like whoop. Don't like that. Don't like that at all. And for no real reason either. I mean, is there really like that much volume coming into the treasury market at the moment? Not sure. This right here is just a recovery, at least in ZB, back to the range here in 12. I'm gonna clear the stuff above it. White House Energy Advisor Houston prices are expected to fall further in the coming days. I guess the issue that I have here with Paul Krugman is that they seem to think that the reason they're going to get shellacked in the midterms is because the economy is doing poorly, and it's just kind of luck of the draw that the economy is doing poorly. When the reality is that what's going on here in markets is very much to do with Joe Biden's energy policy and Joe Biden's fiscal policy and all of these other things. It's 100% the Democrats' economy at this point. And it was a disaster. And I think that a big part of why voters are going to shellac them so hard is because the party refuses to acknowledge it. I think this time recession would start with the EU. Well, yeah, because like, isn't the EU like basically already deep in recession at this point? What is the psychology behind the fact that prices rise when the offers are bigger than the bids on the S&P 500 and still rises a lot? Okay, so how do I approach this? Well, first let me make sure I understand your question a little bit. Price rises when the offers are bigger than the bids on the S&P 500 and it still rises a lot. Oh, okay. So you're saying that the offers are bigger than the bids. Well, I don't know if I really see anything too strong about that. There's maybe there's one big one down there and there's these two above it. I don't know if that's too significant though. But the larger thing here is this, 007. Don't worry about psychology. This is a paradigm from technical analysis that the price action conveys thoughts and feelings that the market has about particular issues, and that those patterns and behavior in humans are consistent, and that's why you see the patterns over and over again. And what we find in the research is that, especially on a short time frame, so when we're talking about level 2, we're definitely talking about a short time frame, right? That these sorts of like predictions based on people's psychology are not really very predictive at all. So what should we use instead? Really, what would be a lot better is a pattern that happens because of the market microstructure, right? That because of the rules of the game, a certain thing tends to happen, right? That's what we really should be looking for. So when I look at the S&P 500, if I do, I take some of my level 2 liquidity indicators like resting orders, okay, and I can see which side is stronger, generally speaking, and which side is how much pulling is involved too, is what I can kind of see with that indicator. So I don't have it on there right now to be able to see it very well, and we'd have to have it on for a few minutes to really get a good picture. But what I found when I put that indicator on and we did a little bit of test with it is that the whether they moved towards or away from the liquidity was inconsistent. So I think that the reality here is that why does price move up and down? The thing that's going to determine whether price moves up or down the most is going to be if there are future market orders or buy or sell. Then future market orders are the strongest indication of where things are going to go. Now, the orders pulling is the next big thing, but the market orders in particular is the most important, right? Then you've got this other thing going on in the S&P 500, and that is that you can have quite a big divergence between cumulative delta and price direction because it is a derivative, right? So I know that all is all kind of not particularly helpful per se, but that's kind of why I don't like trading the S&P 500, right? So right now though, okay, some shenanigans in the treasury there. Right now in the S&P 500, it looks to me like it's just chopping around between 3,700 and 3,710. So they're still kind of stuck in the mud over there. Okay, so what price was that at? 7,500 lot. That's pretty massive. I'm going to tweet that one. Oh my gosh, I can't believe I missed this tweet. Joseph Wang, the administration seems willing to do anything to boost election chances. For example, student loan forgiveness, SPR releases, etc. What if they did a huge buyback program funded by bill issuance to push down yields in goose markets? Wow. That would be such an effing disaster, but like that's such a funny tweet. That's such a funny idea. Don't give them ideas, Joseph. tweet. Okay, we tweeted that. So there was a massive bid at 08.5 that almost immediately canceled, and then we fell back down through it. Do they buy a position? Well, I mean, it's kind of it's impossible for us to sort out what people's positions are just from the market data, unfortunately. Right, we don't know if all of those orders are like new positions or adding inventory or decreasing inventory or what. Sure looks to me like we should have taken 4.1, man. Jeez. Like if we'd taken 4.1 and be up 25 bucks now and then be out and be happy. You know? What does this mean when the front month is getting stronger in ZB? You mean you're looking at the front month compared to the back month? Well, so sorry, I'm gonna make sure I get my terms right here. I think that means contango, right? Yeah. So when a market is in contango, that means that they expect the short-term demand to be higher than the long-term demand, right? Assuming that we're saying that ZB is moving up more strongly than the second month is, right? That means that they expect more short-term demand. So maybe they see some risk, but they don't expect that to be something that's going to be affecting us after January, right? So, but that actually doesn't make any sense because I would expect the March contract. Hold on. I would expect the March contract to. Oh yeah, I would expect the March contract to be higher. Yeah, it's easier to use oil. You're right. I would expect backwardation right now. So I'm not quite sure what to make of that. So it could just be a temporary, it could just be signs of temporary liquidity needs, right? Commodities, it's easier, but I cannot wrap my mind around bonds. Well, but it's the same thing, right? Contango means that expected demand, near-term demand is expected to be higher than far-term demand, right? And it's the same thing in bonds, but it's the opposite, right? So if we're expecting near-term demand to be higher, then that means that we think that there's going to be like either lower inflation or some sort of deflationary event like market turmoil that would cause a bid in treasuries in the short term that will quickly dissipate before March. And that March is around the time that they expect things to turn around. So it might be the same. If you could see June, would June be lower? Right? Because March is kind of like supposed to be the pivot point. So maybe that's why it's higher. Because they expect, lower. And that's why it's lower. It's because they expect shit to be hitting the fan in March. Right? This action's a little frustrating, isn't it? You know what though? Didn't take too much volume to bring us up here to the highs, so I think that it's kind of like it's kind of messing with us a little bit. I'm still not seeing a super convincing case for me to want to get long in here. Surely though, if we had taken the 4.1, that would have been a good spot. Contango is like this. Backwardation is like this, right? Contango, backwardation, meaning that December is higher than March. Contango, short-term demand is higher than midterm demand. Right. So what they're saying is that so you're having this December, not B, March. Okay. So when it moves down, what does that mean? Hawkish interest rates rising. So what they're saying is they expect interest rates to continue rising and inflation to be a concern until March, when things will pivot. And that's why when you come into June, the demand is then higher again. Because they think that by that point, the Federal Reserve will have pivoted and that there will be more demand for treasuries at that point. Right. But it's just that we don't tend to look at the treasury futures for that sort of thing. It's because it's much better to look at like the SOFR futures, right? What are the SOFR's future? Well, let's go look at it. SOFR is what's going to replace the euro dollar. So it's basically short-term bank deposits priced in US dollars being held overseas. Okay. So when we look here, right, they expect there to be a 75 basis point hike in the November meeting. Then December, it was 3.75. Okay. So then they expect there to be another 75 basis point hike for December. February, they expect maybe to do another quarter basis point, but then when they get to March, the probabilities kind of start to flatten out, and they even start to price in that maybe they start to do 2 interest rate decreases, right? You don't use order for a collect. Okay. If you have some empirical evidence to suggest how to use order flow, then we're all ears. Otherwise, you're just another random person on the internet that thinks they know things, but they don't know how they know things. With Goldman saying, was it Goldman that said 100%? I don't remember. I think it was somebody else that said 100%. Chance for a recession in 2023 with their expecting change in interest rates to slow if forward contract rising. Yeah. I mean, there's the possibility that like something breaks in the next month and everything. Today, at the moment, it sure looks like we're okay. I think maybe it was JP Morgan live action. I don't recall. You have bankers log into raw BAS data or Gainsbroker? Nope, we're using Rhythmic data. The live data that we get through Rhythmic's really good. Some of the historical data is a little not always the best. Historical bid ask is a little sketchy on historical data. Wow, now 4.7. $30. You know, I think that it would have been good, like, it's kind of funny. It would have been a pure technical trade if we had taken it, because I could have seen it. We definitely saw it coming back down and everything. I was a little surprised by how far it came back down. So that was kind of why I was like, maybe not. But then I didn't see anything to like force it to rotate down in here or anything like that. It just immediately started going back up and right at that 4.1. So it may have just been that buyers decided 4.1 was a good spot. No, I don't think you have any clue what I'm doing, Ekan. Do you use your volume profile and line up your banker support and resistance with those levels, and now you only wait for those levels to enter using delta when price? No. Oh, that's what you're saying you are doing. Okay, so here's the problem with that. You were taught by a banker to trade? Okay, so first of all, a volume profile can tell you really deceiving things, right? So for instance, we've done this before. We come in here to the S&P 500. Okay, so first of all, if you're going to claim that you made $300,000 in capital, then you're going to have to show live results, right? So if I come in and I can explain to you why something doesn't work very well, then of course that doesn't mean that there's something else that works better or anything. That just means that one particular thing doesn't work very well. And how do we prove that that thing works very well or doesn't work very well? Well, we do it with empirical data. So don't show me your results. I don't necessarily care. What I want to see is proof that the market actually behaves the way that you say it does. And I think that you'll see here that the evidence shows that it doesn't act that way. So for instance, if we were to come over here to a chart of the S&P 500, for instance, and we wanted to see like spots in the volume profile, right? Well, where are the top spots in the volume profile? Like for instance, yesterday, we have this spot in the volume profile and we have this spot. Well, guess what those spots are? That's the open and that's the close. The close is that line right there. No, not that close. This is the so it's the regular session open. In this case, it's the regular session open and the regular session close. Regular session close right there. Right? Okay, here yesterday, regular session open and close. That's where the volume profile is. You're almost always going to find this one is actually a different one. That one's actually different. Because that one, it looks like they closed. Actually, no, they did close right there. Never mind. It's a little hard because it's so small, right? But so your big spots on like previous days in volume profiles, almost always going to be at the open and close, right? Here's the open. Here's the close. Where are the bumps in the volume profile? At the close and the open. Should I keep going? It's fun. It's kind of fun. That day they didn't really do much, so let's you know. Okay, here's this one. There's the close. Where's the volume profile spike? Where the close was. Right? Here's the spike. There's the close. You see the problem with the, I actually was thinking about, hey, maybe the next video we should do should be the problem with volume profile. Now you can come in and you can use the profile as it's forming, right? So typically what I'm looking to see here is like, well, so for instance, when we had this move up to, what was it, 09.5, right? And I saw a little bit of like odd, well, first of all, there was some shenanigans there. But then the other thing was that there was just some big transactions there. So we were able to predict that this point of control was going to form before it formed, right? And does that give you a trade? Unfortunately, no. It just means that it's going to stay there for a little while, right? So you probably don't want to take a trade in that situation, right? And it can become a potential place of a pivot. So in this case, it was like, okay, they're probably going to turn back down. Then we can take a buy. And it was just in this case, the buy ended up being so extreme that I was a little bit concerned that maybe I had missed some news or something like that, because it just came back so quickly, right? But what is really going to determine where this thing moves? I'll tell you. Future orders. If I know what the future order, like right now, I have this little thing that records every transaction that comes through on my feed, both the limit orders and the market orders that come through. Okay. So if I had that file for tomorrow, right? Or, for the next 24 hours, let's say, okay, I would be able to tell you exactly what price it will be tomorrow, because the orders determine where it's going, right? Orders are determinate, right? If you give me the same set of orders, then the price will be the same each time, right? Like if I have one day, it's at 110 even, and you have these sets of orders and it goes this way. And then if I came in another day and it was at 110 and I had the same set of orders, it would do the same thing. Prices would be exactly the same, because orders are deterministic, right? The way that the exchange matches those orders up is deterministic, right? Okay. So that means you need the future orders. Well, we don't have the future orders. But there can be some situations where you can guess what the future orders are going to be, because you know something about some hedge fund, or there's some news that that you're kind of a little bit ahead on, and this sort of a thing, right? And let me tell you something. You have like some sort of key level, right? That you think matches up with the volume profile, etc., etc., etc. Okay, that you think is like support, but the Bank of Japan is going to come out and sell 60,000 contracts today. Guess what? They don't give an F about what your resistance line is. They're going to plow right through it. Hey, Omicron, he's going to come and provide some liquidity and try and buy it in front of me. That's just great for us, right? Okay, did you hear that sound? I don't know if that sound was going through here, but the S&P 500 just had a really jumpy move up here. What's going on? Bank of England's Kun Life. I expect a treasury briefing with the OBR before October 31st. I don't know if that's what's doing it, but the S&P 500 sure moved up there. But that is going to create a potential liquidity hole, so don't be surprised if you see 3732 trade a bunch. Do you have like a study or something? We all know what we know, but not what we don't. Yeah. But the problem is that sometimes is that we don't know what we know, and we don't know what we don't know. Right? This is why it's just so funny to me anytime that I see any kind of retail trader come in and be like, well, this is the way to trade. Because it's like, well, prove it. No, don't show me that you made X amount or whatever. I mean, like, maybe you did, maybe you didn't. Okay. But that you might have just gotten lucky, right? Like maybe you took on like big, huge risk and made a ton of money on this one day, and that's where all your profits came from, right? Like, show me the actual market data. Show me like 5 to 10 years worth of market data and show me statistically how this thing tends to happen and that it predicts moves, right? Then I'd be interested. If you don't have that, then go away. Not interested. They're a pretty good move up. I wish I had taken the trade when I had it, but so there might be some interest in that 1500 just because there was kind of like a kind of built out some volume there for a long time. Don't see, well, let's reset things here first. Actually, so I'm noticing, by the way, it seems like liquidity is a little bit better today, right? Okay, you have a gain futures login, but like, show me a study. You're not like data, right? Like market data. It's like, here is this time period from 2017 to 2022, and here is the particular pattern that you see, and like here's a back test on it, or here's a statistical analysis of that order flow on that, right? No, I'm not going to let somebody on my... You really think I'm going to let some rando that I've never seen before and immediately comes in and starts talking shit onto my stream? I don't give a fuck. Oh, I gotta do that. You were taught by a 10-year banker, okay. But do you have data though? It's like, unless you have data, I don't care. I don't care if Jamie Dimon taught it to you. You have to show me data. So like the issue is, if you were to come in and you said, like, if you did show me 5-year broker statements that showed that you had made, how much did you claim to make? $300,000 or something like that? Yeah. You managed 300K. Wow. Okay. Let's just say that you had made $1 million off of it. Okay. How do I know, for instance, that the edge, that the way that you were making money really actually came from the thing that you're talking about, for instance, right? I would have to like go back and look at like every trade and see if it was actually trading in the kind of spot that you're talking about. Everybody's advertising volume profile trading nowadays, same as price action. It's just another scam invented from the industry. It doesn't actually predict anything. Right. Well, so remember, Tobias, that we learned from the Walrasian and continuous auctions study that the market will tend to run into these areas where a lot of transactions happen, and then the resting liquidity ends up being lower in that area. And it tends to cause price to settle in that area, and it's difficult for price to get away from that area. And even though the resting liquidity at any moment is somewhat low, you actually end up trading a lot of volume in that area over time because it gets stuck there. And so that will create the kind of distribution that you see in a volume profile. Because if it was really truly random, then you would not expect the volume profile to have like these neat distributions, right? It would be disjointed and random, right? But because of this, behavior that's been shown by the Walrasian auction, you get those kinds of distributions, right? But like, think about it. If you see a lot of volume in that area, does that mean that area is support or resistance? No. It means that it was just stuck there. So like, they don't actually end up trading that spot because everybody likes the price. That doesn't make any sense, right? You don't trade something because you think that the price is equal. You trade something because you think the price is too low or too high, right? So why would they come in and say, oh, this is like a fair value and want to trade? Doesn't make any sense, right? No, it's actually kind of just a coincidence because like one large trade took place there and damaged the liquidity that it ends up sitting there, right? So from what we know, something that's been empirically proven, and again, the study, should I go and pull the study for you? Here it is right here. From Walrus Auctioneer to Continuous Time Double Auctions, a general dynamic theory of supply and demand. Essentially. And what do they prove? Price tends to rest at where supply and demand are at their what? Their minimum. So that spot that you see in the column, that's not support or resistance. That's the spot where supply and demand were at their minimum. Right? The places that you would like to trade that would actually maybe act as supply and demand are spots that they weren't at for very long. Right? So like the entire thing that you're saying here does not match up with proven information that we have. So in order for me to believe you, I would need to see like another archive paper that shows archive.org paper that shows that it does the thing that you're claiming. Okay. Good riddance. Goodbye. I think that this guy just comes in. I think what he's trying to do here is like, so I probably should have just like banned him outright from the very beginning, right? Because he's probably doing guerrilla marketing. This is where the thing I think is so funny is like, okay, so here on this channel, we rely on empirical evidence and we have a solid understanding of order flow and what the current research shows, right? And we base all of our decisions off of that research, right? So for anybody to come in and say, oh, well, I have money, like we're already constantly talking about the logical fallacies that are involved in that. So it's absolutely hilarious that people come in, and I see it on Discord too. They think that they're going to come in and they're going to say, you know, the sorts of crazy things that this guy is saying, and that they're going to get viewers or help from it, right? You're not. You're just annoying us all. Well, I guess it's entertaining. I think it's entertaining, and I'm willing to talk about it because it gives us the opportunity to talk about a couple of things that we do know about the market, right? You already said that you had a channel. Give me a freaking break, dude. Thought you were going away. Bye. So, where are we at now? Oh, we're still at 4.07. I kind of suspect that we will come back up to this 150. Actually, probably 16. 16 is probably a better place because it's a round number, right? I don't know if the risk reward involved in that is really worth it though. Maybe if we fall back down again really big. Watch, it's gonna fall back down again and it's gonna go like all the way back down to here where it goes back to 4.1, and then we're gonna be like, okay. Right. Close family friend sold his fund for close to $1 billion, so I'm not impressed with when others talk numbers, but I'm interested in new approaches. Right. Well, so here's the tell that you always get from these kinds of people, right? Okay. One day I was on the 4th floor of 200 West, their Goldman Sachs new building, right? And somebody had a question because my team worked on, I knew some guys that worked on the QA for this other trading thing, right? So I think it was just an excuse to talk to me because they heard that I was really interested in trading. And so I had a chance to talk to him, and I asked him things about, you know, the market and some of the questions, because at the time I was kind of more into technical analysis kind of stuff, right? And what did they, you know, they showed me this stuff. They was like, oh, here we have this database of like the Y values that we have for trying to predict how much impact our orders will have on the market if we transact a big order. This is how we calculate it, and all of the kind of the data that we use to do it. And I was like, oh wow, like I've never heard about anything like even remotely close to that. Where do you learn all that stuff? Oh, University of Chicago. That's where she was a graduate student at the University of Chicago that specialized in order flow, essentially. Right? That's where she learned it from. She's like, oh yeah, like there's this study and there's this study and there's this study. So how did they, so literally, we're literally talking about the best traders in the world at the best trading bank in the world. Where did they learn their stuff from? Empirical studies that you can go and read on archive.org. Isn't that insane? Isn't that insane? And they don't look at is price action things or any of that BS. They didn't even teach volume profile, because I remember her telling me, oh yeah, there's this guy, he uses volume profile and it shows some really interesting things about, you know, we're still, you know, it wasn't something that they all knew. It was like only one guy on the floor knew that stuff. Can you believe that? Isn't that insane? Because it wasn't relevant to what they did, right? That's how they traded, right? So they didn't have to come in and be like, well, I've made tons of money doing X, Y, and Z sort of a thing. No, it wasn't like that at all. In fact, they were kind of adamant that like they didn't really know which way the market was going to go unless they were going to be trading a meta order that was going to move the market, and that they felt that retail day trading was largely an exercise in futility. Well, they didn't say that. They said it's crazy hard and that only a very, very small number of people are actually able to be successful at it. That's what they said. Okay. Which I already knew, right? That's the real deal, right? So they don't have to come in and act pompous or anything like that. What are they interested in? They're interested in the data. Somebody that really knows what they're talking about is going to be able to talk about the data and the science behind it, right? So that's how you can sniff these people out so often, because the guy that doesn't have any clue what he's talking about is immediately going to focus on how much money he claims to have made. Because number one, they know that that's what like gets people's attention the most on social media, for one thing, right? But number two, because they can't actually prove any of the stuff that they believe, right? And they may actually not have anything in there, just trying to get people's attention. This is kind of like... Now, if you have a study, then I would love, because I feel like it's been a while since I found like a study that was really good and really taught us something new. Would love to hear you interview a professional trader. Yeah, and unfortunately, the people that we really want to interview aren't really allowed to talk to the public about this sort of thing, right? That's the problem. I mean, it is definitely the case that the banks are ahead of the research by like 5 years or so, right? Like this inelastic market stuff that came out in 2020 or 2021, I forget now. It's already been like a year or two since it's been out, right? The guys at Goldman were talking about stuff like that, like back in 2015. So they're just a few years ahead of them in the research a lot of the times. A lot of YouTube shorts could be made from the last 15 minutes of the stream. Maybe. I did teach a lot of interesting things, didn't I? I wasn't recording it with the nice enough stuff, nor do I have the time to come in and video edit it. If you come across anybody wants some video editing and is willing to, you know, kind of share in the success of the channel, because I don't know if I really have enough income coming from the stream to pay somebody up front right now. But if there's somebody interested in doing that, I would love to talk to them. But you notice just how consigned recently I've become about this sort of a thing. It's like, well, maybe if I could make YouTube shorts about all of this stuff, it would help the stream. It probably would be really good, but I don't have the time, so it's just kind of like, oh well, doesn't matter. What matters? Well, the fact that we had a really good trade and I was thinking about clicking the button and decided not to at 4.1, that probably matters. I am okay with missing out on that one though, because I don't think that I really had a strong theory to think that it was going to turn there, right? Like that one would have been too technical of a trade. I'm not quite sure I see the real driver for the flows. In fact, when I come in and I look at the 10-year is actually like at lows of the day for cumulative delta. So the 10-year treasury is actually not going along with the volume. They've been selling it here in the 10-year, and the volume is overall losing here. Although probably a lot of that is spread trading. Like I do see buying in the 30 and selling in the 10. So there might be some spreading going on here. Although that doesn't make much sense because that would suggest flattening, and the yield curve has steepened over the last hour. So that means that the 5-year probably was the strongest driver of the flow on the move up. So that maybe matters because I didn't trade that, but that's okay. Would have mattered more if we had traded it and lost money on it, right? So you know what else is like you're saying, oh, I thought it was acting like a cool guy coming in and saying, oh, you don't know what you're doing, you're wrong, and then coming, well, no. Been doing this for 5 years. We know what we're doing. We know what we're doing a lot better than even some people at some professional institutions in some instances. Not because we're smarter or better than them or anything. It's just there's a lot of things that aren't really relevant to their job that we have to be able to do, right? I mean, I would come back for 4 ticks. I don't know if that's really enough. But if you want to be cool, what you should do is you should watch some of the videos on the channel and kind of look at what we teach, and then, you know, not come in and do and say dumb things that are basically nobody in the channel is going to care about, because we're all basing what we do here on empiricism, right? So, oh wow, we're actually coming into the end of the session already? Well, you know what here's another thing that's kind of going on here in my mind at the moment, is that like I used to spend a lot of time arguing with people about these sorts of things, right? And we finally got into a space where we didn't have to do that anymore, and we could just talk about the actual empirical research and stuff, right? I've really enjoyed that. I've enjoyed the last year and a half of streaming so much more than like 2019, 2020, when we were constantly doing that. But you can tell that like when something like that comes along, I have a hard time not saying anything, right? Because I could just say, well, you're being really disrespectful and just ban him. By the way, gonna show you something really cool. Remember when I was saying, yeah, don't be surprised if they rotate and visit that 3732 area where we had a price that was skipped? Look at what happened. Distribution, now they're starting to turn back down, right? Price tends to settle where supply and demand are at their minimum. Now, surprisingly enough, it wasn't there for too long, because when I come over here, we would expect that area to like really stick out like a sore thumb on the volume profile. In this case, it was really more around 33. Okay, but you can see how it kind of works. And like if they get too far away from that, so the way that you would try and trade that is if you had something that suggested there was going to be selling today, right? Like your expected flows are short, or having a move up, you get something like that, great. If I can get filled above that gives us a great location to, you're going to get a little bit, you know, that helps you get that little bit of profit at the beginning to give you room to work with, right? So if you could have got filled up here, you have this to work with, right? And then, you know, hopefully it goes all the way down. And if you have a really good predictor of order flow, then you can just let it run, right? And if you have a good predictor of order flow, you should have a pretty good probability on it, at least 50-50, right? So that's how you can kind of skew the risk reward in your favor. I don't know if the S&P 500 is going to continue to sell. It might be hard for them to get too far away from 3,700 though, right? Certainly, I think that if we got to 3750 today, let's say, that might. We'll of course see where we're at, like at the end of the week, but I'm gonna bet that it's gonna be one of those even numbers, 3750, 3700. Maybe there's a big buy in the next 3 days and it ends up being at 3,800. Well, one of those prices is probably gonna pin us. But we'll see. We'll see. We only know so much. Oh, you actually went short the ES? Not sure if it will play out. Good morning, D. How have you been? It really is like today seems quite a bit more wishy-washy, doesn't it? I think that part of it today is that I've been really enjoying talking to you guys. I don't like arguing with people, but you guys all asked really good questions earlier, and I think we had a good stream. And when I'm having a good time like that, I don't feel as compelled to take a trade, you know? I don't feel as compelled to take a trade, and if I don't really have a really strong reason to be trading, then why should I be taking a trade, right? Unless I really have something that's going to be highly predictive of where it's going to go, right? This whole week so far has sucked. It really has, hasn't it? I mean, well, this is what pisses me off, man. So I don't know how many of you guys were here at the beginning of the day yesterday, or the beginning of the day today, rather. But yesterday, in the treasury, man, when we're trading it, right? This little area right here, that was our session when we're trading it. And then what happened? As soon as we're done trading, good dish, big move down. We were going long rates too. So if I had been like kept the positions that I had puked like $10 on or whatever it was, right? Those would have been like $120 winner. It was like 12. It was like 12 basis points. It was like this insane move out of nowhere, and nobody was really quite sure where it was. I think that it was probably this news that this report out of Bloomberg that like some UK asset managers were having to like sell the mortgages and things like that. Anyways, so you know what I did? I actually took the reversal right in here. I took the reversal from here to here, made back most of the money that I had lost. And then I was still down 8 on the day, so I ended up down 8 on the day, and I thanked my lucky stars and quit. Isn't that so freaking frustrating though? Those market makers are out to get you. Well, I think it's, I've always thought like, oh man, it always seems like it's when I leave that stuff happens. It's because of that London close, right? It's really because of that London close. Because usually after that, then things kind of go dead, right? Which is why, like at the peak of the pandemic, before my team moved up our morning meeting, and I could stay with you guys until 9:30, and that was some of my most profitable trading because I was catching those London close moves. Those market makers are out to get you. Well, given the way that played out, it kind of makes you have to wonder if there was somebody out there doing something the whole time, and that was what was frustrating us, is that they were pulling out all of their tricks because they really had to get filled a lot of sell orders. Yeah. What kind of video editing work are you looking to have done? Well, it was just like what, were you the one that made the suggestion? Who was it that made the suggestion? Oh yeah, you were the one. Just exactly what you're talking about is like, I can record the session and upload it to like, a central location, and then you can go through and edit out the best parts of the stream for shorts. Yeah. That's the kind of video editing work that we'd be looking to have done. The other one is, it would be really nice to have some better thumbnails. Better thumbnails. So I remember there was a guy that came on stream and we tried a few thumbnails and they were okay, but it wasn't quite up to par. I think I need to take, not up to par, they were better than mine, but I don't think that they were enough for me to want to pay for a ton of them. I need to take some better pictures too, though, for them to work with. Okay, so Cole Snoage? Man, I don't know how I'm supposed to be saying that, but you have a good question. Why isn't everyone just loading up on micro 10-year since we have a 95.8% chance to increase rates to 4.5 to 4.75%? You know what, man? I ask this question to myself almost every day. So I think part of it is that, like, just because the federal funds rate is going to get to 4.5 doesn't mean that the 10-year treasury has to be at 4.5. I mean, that would be pretty crazy for the federal funds rate to be like inverted with the 10-year. Okay. But if they really have a strong reason to think that those rates aren't going to stay for very long, it is possible. That's why you see on the 2-year, because look, the 2-year is right there at what, 4.5, and we're not too sure if we're going to get to 4.75 yet. I think the market is still a little bit skeptical that they're going to get to 4.75. You know what I mean? So if you think that we're going to get to 4.75, then sure, I would buy 2 years, right? Buy 2 years and you'd make $250 on it. Yeah. Oh, I don't have tons of experience, but would like to try for something to do. I have Adobe Creative Cloud, done audiobook editing, read lots of books on it. Oh, that's interesting. Yeah. Well, I'll make sure to turn them on tomorrow. I don't always have the recorders on because it's a little bit more system resources. Yeah. But 4.5, yeah, but the 2-year is at 4.5, right? So if you look on my screen right here, the 2-year is at 4.5, the 10-year is at 4.08. So the 2-year is reflecting that reality, but the 10-year is not. The 10-year is lagging because they don't think that it's going to stay that way for very long. We'll see if they're right. We'll see. I'm a little bit skeptical myself, but some people seem to be really, really confident about how this is going to play out, and I know better. Yeah, they're definitely going to raise 75 basis points in the next meeting. The 4. The question is, 1, will they do another 75 basis point in December? So the thing is, like, especially with housing inflation, like, what if we've seen like the inflation cool off here over the last few months for like the Zillow index and so forth, right? But what if like the next few months it starts going back up, right? That would throw a big wrench in our plans. So I think that there is a possibility that is not being priced into the markets very well at the moment, and I don't know what the percentage chance is, but I think there is a percentage chance that they're going to get above 5% and that they have to continue raising rates into next summer. I mean, that's possible. It's less likely, but it's possible, right? Yeah, anyway, Zach, I need to come in and look, because there's some services that kind of help you share the data a little bit better. I could just use Google Drive though, right? Then I just put the source material, because I can have it output like both the main screen and the just my screen, right? And then you could cut out spots. And since you're sitting here watching, you could go in and you could say, oh, Seth said something here that would be really great to turn into a video. And then you just make note of what the time was, right? Down here. And it could make it into a shorts. And then there's this new service that lets me actually like pay people by the video. So like it can say, well, he made all of these shorts, so he gets the revenue from the shorts. Totally would do that. Like I'd even say I would give you the majority of the revenue from the shorts. Or maybe if not, I mean, it depends on how much it was. They're not giving the revenue on the shorts yet, but at the beginning of next year, YouTube's supposed to be doing that. So supposedly, if you hit the algorithm just right and you get like 1 million likes, then you could make millions of dollars from shorts. But we'll see how that actually turns out. But as it stands currently, I'd be willing to give somebody 100% of the revenue from the shorts that they make, because I'm more interested in the channel growth. Can you trade the fund rate actually? So you can trade like the SOFR futures and a couple of those other instruments that follow the federal funds rate pretty closely. And brainstorm some ideas. Okay. If there are like some technologies or services that you'd rather do it with, I'm all ears. Because the thing is, you wouldn't have to do anything super complicated. I mean, yeah, you'd probably want to know, how to crop the image, right, to a cell phone format, right? But other than that, it's just like super basic editing. It's just somebody with the time to do it. I've been trying to convince my wife to do it, but the babies are too much. She doesn't have the time to do it either. I think she'd be good at that sort of stuff. Yep. Okay. Well, it's time for me to go too. So what should we put in today's title? Yeah. Let's see here. It's tough to say. I don't know what would really remind me of today. We argue about volume profiles. I'm just gonna not we argue, I'm gonna say arguing about volume profiles. I love the thing with the volume profile because there really is like the way that a lot of retail traders try and use volume profile, I think is a little silly. Okay, guys. Tomorrow, in the meantime, stay excellent, team.